Well, good morning, everyone. It's March 18th. It's a Wednesday, and boy, oh boy, it's another crazy day on Wall Street. Oh, yeah, it's like that. Let me get into it with you right now. European markets down 5% after broad losses across Asia. Asia really took it under the chin. Wall Street futures were suspended this morning. Again, we hit a 5% limit overnight. The White House, could propose $1 trillion in spending to ward off the pressure of business closure to contain the virus. Federal Reserve announced more measures to keep the financial markets open, and Treasury Secretary Steve Mnuchin said Trump wants to send checks to Americans in the next 2 weeks. I've heard a lot about it. From what we understand right now, they're expecting up to 20% unemployment, and they're trying to send every American a check for $1,000 over the next 2 weeks. I don't know how effective that's going to be. The move adds to effort from governments around the world that includes trillions of dollars worth of loans to businesses, mortgage relief, grants. Trump proposal would include $250 billion for small businesses and $50 billion for airlines who need it really, really bad. Now, that's overnight. As recently as a few minutes ago, Trump asks lawmakers for a $46 billion more. We've had infections now over 200,000, and borders are jammed across Europe. Things are not getting any prettier, but usually that's the case before things get better. And now we're having a rift with China. We've had 13 U.S. journalists facing expulsions. And folks, the last thing we need right now is discord. The most important thing right now in our world is for the global leaders to get along. We don't need friction right now. Friction is not going to help. Also, I've been getting asked why the bond market has been going down with the stock market going up. That's because the Fed has been throwing as much liquidity. What liquidity does is it dilutes the upside and the downside pressure. And that's going to cause the bond market not to react to stocks for the next week or two, to have that inverse relationship. But it will continue. It may not be as severe, but it should continue. Again, the Fed right now is controlling the rate of bond movement by throwing liquidity. They're just throwing liquidity. Remember, the more liquidity, the more pressure it takes for the movement to occur. That's why you have stocks that have low liquidity move like crazy, and stocks that have big liquidity move a lot slower because there's a lot more liquidity to ride that wave. There's a bigger influx of buyers and sellers, and that's why the bond market right now is not trading as inverse with the stock market as it's been in the past. That's because the Fed is doing everything possible to put as many fires out, and they're putting influx of capital into the bond market for that to occur. Now, let's talk about the stock market. We are right now near very, very medium-term support levels. We haven't been here since November of 2018. The price right now is closer to about 27% below the highs, and the markets are right now in deep doo-doo. But if you look back over long term, over 10, 20-year period, you will see that the market hasn't really sold out that much, and we are near strong support levels. Now, if the market was to go further down, we have very, 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 very strong support around the 200 level on the SPY. Now, that would already, remember, the high is at 340. If we break to 200, that is like a 40% drop in the stock market. Don't think we're going to go there. That is the worst case scenario. And if we do, we're going to bounce right back up. I personally believe that the stock market is going to stay near the current level, maybe a little bit more, and I'll tell you why. There's a reason for it. If you look at momentum levels, and it's important right now to look at momentum levels, the overall market, this is the overall stock market of all stocks priced over $2. Let me make this a little simpler for you to look at. If you look at 20 years, momentum levels right now, the percentage of stocks trading above the 200-day moving average is at the level that we were, as you could see here, during the time the market crashed in 2008. But think about something. October, November, December, January, February, you see that? Few months pass by. This is a monthly chart. We're looking at monthly data right now. So just because we went down to this level doesn't mean we can't bounce around this level, go up another 500 points on the Dow, 1,000 points down, 1,000 points up. Remember, we're in a wait and see mode right now. So it's very, very hard to anticipate the ebb and flow of this market over the next few weeks. But what I can tell you is that we're getting really, really close to the bottom. Even if you look at, let me show you the NASDAQ. And I'm going to tell you right now, the momentum levels, which is what I focus on the most, they have been the best indication of what's been going on. Let me remind you, I want to remind you something. We have 18% on the NASDAQ 100, which isn't too bad. I drew this circle over 3 weeks ago, and we are there right now. If you look at momentum levels, it shows that we can go further down. So we could go a little bit more, but again, we're very, very close. I mean, these are historic levels. So even if we do go a little lower here, don't expect anything crazy. Maybe a little bounce, maybe another 10, 15, at the most 20%. But the 80, 90% of the downside is behind us. I am fairly confident in that because momentum levels. Remember, these are the same levels that told us, let me show you the weekly chart going back 5 years. Remember these levels right here? This is what told us the market was going to cool off. And we did, and then we went back, and then we really cooled off. And I told you guys, I told anybody who would listen to me, if you don't believe me, look at my videos from a month, 2 months ago, that when we went above 85th percentile on the S&P, we were grossly overbought, and I anticipated us coming down just like we did here, and it happened exactly as I thought. But now the question is, how much lower are we going to go? Well, we can go a little bit lower. On the NASDAQ, more than the S&P 500. Let me show you the S&P 500. This is really important, folks, because momentum levels are extremely accurate. See, if you look at the S&P right now, over time, momentum levels are, I showed you the broad market, then we looked at the NASDAQ, now we're looking at the S&P. As far as I could tell, the S&P is, look at that. We went to 4%, we're right now at 10%. Maybe just a little bit more, maybe just a hair more, just to give us a little bounce. But again, the worst is far, far behind us, far, far behind us. It looks like we're going to have a little bounce over the next few days. If you look at the RSI, let me show you this. And these videos are a little longer than usual because I want you guys to have the best analysis possible right now. And again, we switched the RSI to 10 days, and we look here, and again, remember what happened here. Higher price, right? Focus, pay attention. This is really important. Higher price, RSI, momentum levels going lower, right? Right now, we got lower price, but momentum levels are going higher. That's a very positive sign, and that's telling us we're very close to the bottom. If RSI momentum levels cannot sustain lower RSI than this was done here. Look at that. All of this, and the RSI said we're done. We can't go lower. Momentum levels are at the bottom. That's a very, very, very positive sign. Also, volatility is going crazy. This is 2008. This is now. We went to about 54, 55. We're at 67 right now on the VIX. So volatility levels are crazy. They're actually insane. Now, I've been asked from traders, Roger, volatility is crazy. We don't want to trade to the short side. We want to hedge to the upside, or we want to trade to the upside, but we want to take advantage of this down market. Folks, I got 3 assets for you. Ticker symbol DOG, D-O-G. These are non-leveraged assets, which means you could trade these in an IRA account, most IRA accounts. But you can go short, you can go long, but the best part is you don't have to go short. You can just buy this to protect yourself. If you have a Dow portfolio, or if you want to go short the Dow, you can buy DOG and go short the Dow without going short. You can buy the SPDN, and I specifically did the non-leveraged today. A few days ago, I showed you the leveraged. Today, I showed you the non-leveraged. So let's say you want to get into the S&P, you want to get to the short side, but you don't want to short SPDN. Let's say you're a NASDAQ trader, PSQ, non-leveraged. They're non-leveraged. That means they give you the exact exposure as the NASDAQ 100. This gives you the exact exposure as the S&P 500. And this gives you the exact same exposure as the Dow Jones. So dog, Dow Jones, SPDN, S&P 500, PSQ, NASDAQ 100. Folks, again, if you want to short the market, but you don't want to be stuck with a short, you want to go long, you don't understand how to short, or your broker doesn't allow you to short, or you have an IRA account and you don't feel comfortable shorting, or you have a portfolio that you want to hedge and you don't want to go short, dog, SPDN, PSQ. Or let's say you have the S&P 500 long and you don't want to take a tax consequence and you just want to hedge your portfolio, SPDN. Let's say you have a bunch of blue chip stocks that your grandma gave you 20 years ago and you don't want to take a tax loss, DOG. Let's say you have a huge exposure to China, growth stocks, tech stocks, PSQ. Now, folks, before I sign off, I got something really, really important I want to share with you. I can't speak straight. This downside, there's too much excitement, too much opportunity to make money. But before I sign off, I want you all to think about something really, really important. Think about this for a minute. Whenever we experience a market crash, who suffers? The average Joe, right? It's always the average Joe. It's never the billionaire. The billionaires always come out of this unscathed, and the rich always get richer. America's elite, the rich folks, the smartest investors, they seem to do well, right? How many times have you read a story? Billionaire goes broke in a market crash. I've never read one. Multimillionaire loses a fortune during a stock. You don't hear a lot of that. Why? Why did they do well when the average Joe, when most Americans are struggling, waiting for their $1,000 check from the Fed? Why? Why is that? Think about it for a minute. Well, it's got everything to do, and I mean everything to do with the fact that America's uber wealthy have secret information that most of us just don't have. That's actually one of the reasons why I do these videos, to give you guys the best unfair advantage. But imagine millionaires, billionaires, insiders, right? Unless you're a rich person, unless you have inside information, or unless you're a billionaire, you just don't have access to that data. Until now. America's #1 insider can no longer keep it a secret. He's going to let it all loose. He's breaking his silence. He's got a lot to say, and you guys all know who he is. This guy, he's one of the most famous people in the country, and I'm bringing them to you live. That's right. He's going live today, 12 p.m. Eastern Time. He's going to unveil trading secrets of the elite that can transform your portfolio. Folks, you don't want to miss this. Again, think about it for a minute. Who always loses during a market crash or during a downside market? It's the regular Joe. How come you never hear stories? Warren Buffett and Bill Gates lose their fortune. No, you hear, oh, they were worth 100 billion, now they're worth 200 billion, right? Think about it. Why does the average Joe always suffering? Why? No more. Get the same info. Get the same info that has been once reserved for the uber rich, for the elite. Gain an unfair advantage in this market. America's #1 insider, he's not going to keep it a secret anymore. He's coming out and he's going to tell you exactly how they do it. Get on the same page. Get an unfair advantage from the America's #1 insider. Folks, click the link below. Register. You will not regret this. You don't want to miss this. Folks, if you trust me, sign up now. This is going to be gold. Talk soon.